Hi, in this video, I'm going to look at spread trading versus commission trading. Now, I get asked the question quite a bit, am I better off spread trading or should I go to commission trading? So I'm firstly going to briefly explain the difference. Spread trading is that all your costs are contained within the spread. I should put a caveat to that as opposed apart from your cost that's not included in the spread is if you're trading and holding positions overnight, you'll get charged a carry trade. That's a small amount each night, or sometimes a bigger amount each night, depending on your broker. But if you just trade opening and closing a trade on the day, your only cost is the difference between the bid and the ask, or the ask and the bid, whichever way around you're trading, and that is your cost basis. Commission trading works on a tighter spread, so the spreads are tighter, and you'll have a fixed fee per contract. So you'll have a contract fee. I'll talk about that as we come through. So it's made up of two parts. Okay, fixed spreads. Now, these are not so common these days. There are a couple of brokers that still and major on using them, and they've got quite a benefit to newer traders in my book. And I say newer traders, I don't understand why a lot of traders don't use them more so, because the whole thing about fixed spreads is they are fixed during the daytime. So they're fixed between, actually the broker I look at quite a bit is between 7 and 10 o'clock. They're fixed at, on the euro, 0.6. So it's 0.6 fixed throughout the day. And then come 10 o'clock, they widen, and you know they're going to widen at 10 o'clock to the next level. And then at 11 o'clock, they reduce down again and through till 7 o'clock. So there's no movement when the news is coming out, or this, okay, at 10 o'clock they will widen slightly, but there isn't the volatility in their price levels, or their spreads, I should say. And it's when a spread widens quite quickly, it can take your position out quite quickly, even though if the ask is going up high and and higher than your stops, it's going to take your stops out. So you've got to be, this is the place where it benefits. You've always got to look at your broker, how it's making its money with fixed spreads. Most of them are spread betting, and near enough at saying that most brokers out there these days are market makers of some form or another. They might try and dress it up a little bit more, straight through trading and etc. I'll put a link on the bottom of this video, below the video, and you can have a look at a lot more detail about brokers and how they make their money. But they're brokers, as I say, if they're market makers, they're relying on 70 to 80% of their clients losing money, so they actually take the risk. They'll match up wherever possible. If they find they've got a bias of buying on or selling, they can hedge some of it. But at the end of the day, they can make money through the trade itself. The spread's a bonus, effectively. Don't ever tell them I told you that, but it is effectively, because if they're not putting it out to the main market, they're making the market, so that spread is all theirs. If they're putting it out to the market and passing it on, part of that spread would be taken by somebody else. So they've got the spreads, so their spreads can be competitive at the end of the workday. Variable spreads, these have become more popular with most brokers, and it became a bit of a fad, to be quite honest. It knocked a lot of the fixed spread trade brokers away. However, they are variable, and they vary throughout the day. Any signs of news or higher volatility, and the spreads widen. You get the lovely show-stopping spreads of 0.4 or 0.5, but often they're 0.6 anyway. And you'll see those for parts of the day, and then all of a sudden it might go up to 1.2 or 2 or 3 even. So those spreads can widen quite quickly, but it is possible. So there you go. You may have a minimum spread, but all of your cost is included in that spread, aside of the, as I mentioned, the overnight costs. Okay, the spread are often tight, however, widen around the news, as I've mentioned already, with variable spreads. Commission trading is where you have a fairly tight stop. In fact, one of the brokers I look at has got a zero spread for, at times. but its average is 0.17 on the euro dollar. This is so it's got zero spread, so there's no cost at times. The worst case time you've got, let's say, a 0.2 spread. However, the commission you pay makes up the difference quite often. That particular broker, it starts from $4.50. Then when I say it starts, it gets less if you're a bigger trader and you can prove that you trade so much. They'll reduce these costs for you. So you can actually gain from costs if you're a bigger trader, and if you're a bigger trader, it may make more sense. But it's $4.50 per full size contract per round trip, so per trade. So open and close, it will cost you a total of $4.50 for each full contract. Now that will be pro rata the size of your position. So on a full contract, it relates to something like a 0.45 spread. So you can already add the 0.17 to that, and you're getting the same 0.6-ish spread as you are with a fixed spreads broker. And there's not a great deal of benefit from the cost of getting in and out of the trade. And also it can be more if you've got commission traders, commission brokers that actually have a minimum commission. So if you're trading less than the contract, it's still charging you $4.50 or $5, whatever. I can't remember I know the name of the broker. I can't remember how much they charge offhand, but it's quite a bit. So you're ending up paying more to have a commission-free, or I say commission-free, a smaller spread. You're paying for the benefit and quite a bit. The good thing is their spreads are tight, as I mentioned, with 0 to 0.17 quoted. So quite tight spreads. The most important part of it, though, is if you're trading and you're using, I would suggest mostly for day traders, this might come into play, is I'm going to draw this on here, and I'm going to simplify things massively, just in whole numbers. So if your stop was at, say, 100, so if your stop is at 100, if you could only draw, it'd be good. And let's just say on your variable or fixed spread, it's 3 pips. So if the price got to 97, you would be stopped out on this, because the price gets to 97, that would be the bid on the chart. The offer would be 3 pips above that, so at 100 it's hit your stop, you're out. Now if you were trading with a commission account, your spread is, although the cost is the same, the spread is smaller. And so if you were trading with, let's just say the spread was one pip, as I say, I'm just exaggerating it to give you the idea. It would have you would have up until 99 before it got stopped out. So that extra bit can be the benefit of commission trading. Financially, otherwise, there isn't a lot of benefit in terms for most people to trade it. It looks good on paper. So what's best? Well, what's best, it depends on the individual. If you're looking to spread bet, I say you can only trade the spread, as commissions are normally available in CFD. There will be, I'm sure there'll be a couple of Forex traders that provide accounts, offshore Forex traders that offer accounts, but in the main, if you're wanting to spread bet, you'll have a variable or fixed spread. Okay. And you won't be able to pay a commission. A day trader might be better off with a commission account. So with that if you're using tighter stops, even a swing trader or position trader, if your stop is just a bit close, you might be better off paying the fees that way, and to get that the small lesser stop outs potentially. So fixed spreads have the benefit of open positions all day long. So as I mentioned, so it really depends on the type of trading you're doing, the type of account you want to have, as opposed to is one better than the other. As I say, the main benefit with commission is the fact that you've just got that extra bit of wiggle room before you get stopped. Okay, hope you found this useful. Bye for now.